Bank and tech as the yield curve inverts. Good morning, everyone. It is December 5th, 6th, 2018. I am Eric. So, I've talked about the economy collapsing and causing shit to hit the fan for almost 6 years, something like that, 5-6 years. And here we are in 2018, and it seems like this is happening now. Because stocks aren't supposed to crash in December. Most of the time, we see a good rally during December because of shopping, right? But not this year. Not this year. And you might recall last year when Queen Elizabeth claimed that it would be the last Christmas. Well, here we are, 19 days away from Christmas, and it looks like Christmas is still on. But to close out the year, so what happened on Tuesday is definitely extremely unusual. And the nice rally closes out the year. Dow Jones Industrial Average fell 799 points, which is the fourth largest single-day point decline in stock market history. In fact, there was not a single day during the entire financial crisis of 2008 when the Dow dropped by as many points as it did on Tuesday. Many believed this stock market correction would be limited to October. Then it stretched into November, and now it has extended into the safe month of December. And the reason, again, why they consider it the safe month is because of people's splurging on Christmas gifts. It would be difficult to overstate the carnage that we just witnessed. The Russell 2000 had its worst day in 7 years. Financial stocks plunged by 4.4%, and as you will see below, FANG stocks lost enough money to literally buy McDonald's. And by the way, Apple's going to be laying off a lot of people, along with Bear, GM, Ford, and store closures continue to happen. There are many factors that are influencing the market right now, but the biggest thing that spooked investors on Tuesday was an inversion of the yield curve. Just when it looked like the battered bull was healing, the Dow Jones Industrial Average suffered a drop of nearly 800 points Tuesday when the bond market sent an ominous signal. The yield on the 2-year U.S. government bond rose above the interest rate paid out by 5-year notes. Why the pessimism over that obscure-sounding shift? Historically, when short-term rate rise above longer rates, which is dubbed an inversion of the yield curve, it signals an economic slowdown is coming. So, and by the way, we've been in an economic slowdown. It's already here, and it's just going to slow down further. Man, look at some of the, too bad we don't have side boob hour here. It should be noted that the yield on 2-year bonds has not yet risen above the yield on 10-year bonds, and until that happens, many investors will not consider the yield curve to have officially inverted yet. But any way that you want to look at it, what has been happening in the bond market is really bad news for the big banks, because is going to eat their profits. So, and then of course we have Deutsche Bank and their rampant fraud. Anyway, they go on to say that this is a continuation of the trend that has been building for some time now, and that at this point the damage that has been done is immense. The following numbers come from Zero Hedge. Global. Man, it seems like I cannot do any videos without being interrupted. Okay, so global, basically, important banks are down 30% from 52-week highs. U.S. financials down 14.5% from 52-week highs. Goldman Sachs is down 33% from 52-week highs. And it looks like all the shit that Gregory Mannarino, Peter Schiff, the guerrilla economist, and among others, I mean, there's a whole list of people that have been predicting an economic collapse for some time now. So let's go over to Zero Hedge and check out some of these headlines for the economy. Deutsche Bank. This is a clear signal that the trade war is, as the government may find it difficult to tell the public that they have offered significant concessions to the U.S. Global markets futures plunge as traders brace for China's response. It is a sea of red out there as traders brace for China's response. Oil crashes after Saudi's proposed smaller than expected production cut. Any production cut from OPEC plus shouldn't be overly large, with a reduction of about 1 million barrels adequate, but there's no agreement yet. China, that's not economic. Let's see here. Alright, that may be the end of there you go. Carnage continues. U.S. futures flash crash over Hawaii CFO arrest. Having taken off to watch Bush's funeral, drifting modestly higher before the early close, reports of the arrest of Hawaii, whatever his fucking name is, CFO at the request of U.S. authorities has sparked carnage at the reopening. Okay. Anyway, I thought I would share this latest economic news with you. Again, we should really expect the worst when it comes to the economy. Donald Trump ain't going to save it, just like he's not going to save your rights or your free speech or the country. Now, I just got through watching a video from Lisa Haven. I'm not going to diss Lisa Haven in this video, but she herself said that Donald Trump signed a bill that allowed big tech companies to censor anyone they wish on their platform. These are public areas where people are supposed to be able to speak their mind. We're supposed to have freedom of speech. And Miss Haven did not go far enough and condemning Trump for signing that shit. And that's what I'm talking about. When somebody's preferred candidate does something like diminish our rights, they shrug it off. And that's just fucked up, man. Anyway, I hope you all have a good day. Kill the state before the state kills you.